So welcome back to the channel. We're going to talk about one of the bright lights in our real estate market for 2024, and that is luxury. Now, we all dream of something a little more extraordinary, right? Well, in the world of luxury real estate, these homes aren't just structures. They're living and breathing works of art that inspire creativity to produce a lifestyle that we all can only dream of. Luxury homes are more than just a place to live. They are the heartbeat of cutting-edge design. From floor plans that maximize every square inch to architectural details that showcase craftsmanship through the home. These homes don't just reflect the times, they shape the future of home design. Take, for example, open concept living. This idea originated in luxury homes, and now it's become a mainstream design trend. People love the flow, how the kitchen, dining, and living spaces come together. They create an inviting atmosphere that's seamless. So this is something that luxury homes understands. Luxury homes often lead the way in sustainable design and technology. Smart home systems, eco-friendly material, energy efficiencies. These are becoming standard in high-end homes. And we're even seeing some of these innovations trickle down to homes in all price ranges, as we always do. Now, something everyone can appreciate in the heart of the home, the kitchen. In luxury homes, this is more than a place to cook. It's an experience. And I love the kitchen. State-of-the-art appliances, custom cabinetry, and expensive countertops makes every meal feel like an occasion. Then there's the outdoors, another hallmark of luxury living. These homes often blur the lines between indoors and outdoors with resort-style patios, lush gardens that create a sanctuary, and features like fan favorites, infinity pools. It's about crafting spaces that elevate the way you live. But it's not just about materials or technology. It's about the feeling. Luxury homes are about dreams. They're about emotions that they evoke. Walking into a home like this could feel like stepping into your own personal retreat. That's right. We're going to talk about what makes a home luxury. What's that price point? Let's talk about some of the luxurious elements through the home that make it luxury, and about some of the different markets throughout the United States that might be experiencing higher sales in the luxury market. We're also going to talk about our current interest rates. We're going to talk about what is going on in our real estate market today. And I'm also going to bring on our famous lender from Glendale, California, primary residential mortgage, Mr. Dave Sousa. Dave, welcome back to the channel, pal.
Good morning, my brother. How are you? I hope all's well in where you are, and looking forward to a good podcast this morning.
Las Vegas today. I'm back in Las Vegas. So, of course, Dave always wonders because I'm between Santa Clarita area, California, Las Vegas market, and also the Treasure Valley area in Idaho, where I'm licensed in all three states and selling real estate there. Listings, buyers, we're working with all of them. And but right now, we're in Las Vegas today and bringing you some of the hottest information on the luxury market. Luxury sales, Dave, are up 5.5% across the nation in the first half of 2024. I mean, it's really something else. And we should round out the year here in 2024 ending with about somewhere between 8.8 to 9% increase in sales in the luxury market. Not prices going up, but sales in the luxury market.
You mean the number of sales?
Number of sales. Yeah, that's right. So having said that, I get asked this question a lot. What makes a home luxury? What defines a luxury home? As we get into the elements of luxury and things that make it luxurious, right? That becomes very subjective across the board. But we could talk about price point. Price point seems to be across the country, $1 million seems to be that entry level into the luxury market, right? Some markets, of course, that's not going to even buy you an apartment, right? Other markets, that could be a pretty darn nice, luxurious home, just depending where you're at. So the median price luxury home is somewhere between 1.28 to 1.5 million in sales across the country, we're speaking. And we're going to talk about some of the other markets and what kind of $1 million home sales they've been having and what neighborhoods those might be landing in, right? Dave, before I get into that, though, I wanted to bring you on and talk about the market real quick, our current interest rates. You know, I was seeing a 6.67 for an average 30-year right now. I know you could beat that number a little bit. What could you share with us about what you're seeing in the market real quick?
Well, let me give you a quick recap on what happened last week. And we had some heavy numbers come out last week. The CPI, which is a consumer price index, one of the inflationary indices. And then the other one, which came out the following day, was the producer price index, the PPI.
The
And
PPI.
both of these numbers now, over the course of the last year, they have come down significantly from where they were, which was way, way up. In the inflation at one point was up in the low nines. And while it is way, way down from where it was, there was an uptick last week from the previous reading for both of those, which is not good for interest rates. So as a result, interest rates, I would say across the board, rose about 0.25% last week. So that puts us where our par pricing, which is our cost to buy rate, what was at 6.25 the week before, is actually closed this week on Friday at 6.5.
Yep, six and
So
a
it was
quarter
up a
last
quarter
week we
point.
talked about. Now you're up to 6.5 for your
Yep,
par.
6.5. And 6.5 means you're not buying down the interest rate. If you want to go lower than that, you would have to buy the interest rate and pay points and all that kind of stuff.
Right,
But in the interim, at a 6.5 rate, at a par rate, that is about a quarter point increase from the week before. As far as the markets, investments, your 401k, your IRA, and your investments, the stock market was relatively flat. The NASDAQ, which is the tech-heavy NASDAQ, closed a little bit up. The regular Dow closed a little bit down, so the net average was pretty close to flat. Okay. That's sort of a recap of what happened last week. The big ticket item coming up for this week is the Federal Reserve meeting on December 17th and December 18th. The Federal Reserve, the Federal Open Market Committee, meets on Wednesday, the 18th. The Federal Reserve they'll make their announcement, which is largely expected to be a quarter point cut in interest rates. Important to note that quarter point has already been baked into our rates. Right. So when the Fed comes in and says, okay, there's a quarter point cut in rates, do not expect interest rates to improve. They should stay pretty flat. On the flip side of the coin, if there is not a rate cut, we could see a worsening of rates. And on the last option, if there is a cut that's more than a quarter point, which is extremely unlikely, then we would see some improvement in rates. Yeah. So that's the big ticket item coming up. And the last thing I'll say is this: on the decision that comes out Wednesday, that doesn't have so much effect, especially if it's not what we're anticipating. But immediately following the announcement, at about 2:30 p.m. Eastern or 11:30 a.m. Pacific time, Jerome Powell will have a press conference at which he will discuss what inspired their decision with what they did. And very importantly, and this is where all the markets will be poised to listen, is what he anticipates for the future based on inflation and the jobs market. So important stuff coming up this week for interest rates.
Dave, I love your rate of speech, my friend, because you take time to really explain it very well. And that's one reason I like to send my clients your direction, because you're not going to, rush it real quick and, be like in a hot New York minute, right? Like I talk sometimes. But when I do talk to people about real estate and some of the intricacies of the contract and the deal, I do like you do. We take our time, we talk. So I can appreciate that.
Well, the pace of most things in New York is somewhat faster than most other places in the country. It's a great place to be. So
yeah,
you're good.
Listen, I lived in Idaho too for a long time. I have a home up there, and I'll tell you, a little slower.
Yep, I'm sure it is. Well, good stuff. I'll let you carry on, but I wanted to give you a little update on what happened with the markets last week and what to anticipate for coming up this week.
Awesome. I appreciate it, Dave. That's all. We always love the info hot off the presses from you. So again, you're at 6.5 par, and 6.67 is the average 30-year mortgage rate across the board now nationally. That's good. You can beat them out a little bit there. So I'm getting asked from a lot of people. We're talking about this luxury and the uptick in sales in the luxury market for 2024, when we've been in this environment where affordability has been crushing people, and rightfully so, because the interest rates have been so high. I mean, they've been north of 7%, adding up to 8%, battling back down under 7, and then now we're getting into 6.5 right now, right? And again, the volatility of this interest rate market has been driving people bananas. I know it's been driving me crazy and a lot of my clients. There are elements that you can employ again to smooth that out, as far as watch the rate, get your rate locked at a certain point, follow the market. You don't have to do it when you make the offer, things of that nature, right? And there's also the rate buy downs that you can employ as well. But all that being said, people are saying, how can the luxury market be going up, anywhere from 5.5% to 9% for the year of 2024 when we've got rates like this? Well, the simple answer is this: most people buying luxury are paying cash. They're either paying large cash down payments, which really takes the sting out of the interest rate anyways, makes it really just kind of non-existent or obsolete. And another reason is they're paying all cash. There's 50% of all luxury sales for 2024, for the first half of 2024, reportedly, was all cash. Every luxury home purchased, all cash. 50% of them. That's amazing, don't you think, Dave?
Which, to your point, if someone's paying all cash, they could care less what interest rates are. They're
Exactly.
unaffected by the interest rates, which is
It doesn't matter at
a
all.
relatively small percentage of the buying market. But yes, absolutely.
Yeah.
Why would they care? If rates were 2% or 10%, why would they
Yeah.
care? They're paying cash. Yeah.
Right. It's a non-issue, you know? So, having said that, I was going to ask you, what is the average for you? People coming to borrow money to buy a home, do a mortgage. What are the kind of some of the average numbers that you've seen through your many, what are we at, 30, 40, 50, 100 years or something you've been in the game?
Yeah, my average loan amount, and remember, loan amount is not necessarily correlated to purchase price because
Right.
two people buying a $1.5 million home could have very different loan amounts depending on what percentage they want to put down. But I would say my average loan amount is probably in the 750 range. Average.
750 loan amount.
I would say
And
here
probably,
in Southern California, my average loan amount is in the 750, maybe 750 to 800 range.
okay, great. That makes sense.
Because
And
while on a lot of purchases, let's say you're looking at $1 million plus price, so you're looking at an 800,000. It's very common to be doing 800, 900, $1 million, $1.1 million, $1.2 million loans. Those are very common. But
right.
there's also a lot of transactions that are, let's say, when you're talking about an equity line or home equity line of credit or a HELOC,
Right.
or somebody who's refinancing a mortgage that they've had previously. Those are the lower loan amounts. So when you do the average, I would say the average is around 750, 800,000.
Okay, that makes sense. And again, just to follow up real quick with the average sales in the $1 million luxury market, 1.2 to 1.5 is your median in that number. And then a lot of $2 to $3
And that's
million
nationwide.
nationwide. Yeah, we're talking nationwide because that really fluctuates in different markets. You know, California, LA markets, and New York, and different areas. It can really change. You might be in Texas or Idaho, and that's just a whole different number, right? And then of course it depends where in those states are we talking about. So, but what's interesting too is besides the medians and being into the luxury market, now you've stepped into that luxury market with $1 million, right? Or $1 million, $2 million, $5, $2 to $3 million. Now, when you go up to 5 million, that's the next mark of the ultra luxury market. Believe it or not, we have an ultra luxury market of 5 million and above. Now, that market, that particular sector, actually suffered a little bit this year of 2024.
Oh, the ultra luxury market.
The ultra luxury market suffered a little bit, yeah. Longer days on market, price reductions. We saw a lot more price reductions in that ultra luxury market, and that's just going to be because of the lack of I'm sorry, I'm losing the word here. Lack of demand on those numbers. So, or on that demographic of homes. So, yeah, that really shot down for 2024. But everything up to that point, from the million to 5 million, that shot up anywhere from almost 9% for 2024. Not in price, but we're talking sales, right? So let's look into, and again, 50% was the number of homes that were being paid all cash in that luxury market as well. So I was going to ask you, Dave, with your clients that are coming your direction, I know you were saying that 700, 750 seems to be kind of an average loan amount, right?
Mm-hmm.
What the most Googled question out there about real estate right now today, as I was looking up, is loans. How much down do we need for a home? And that's always a big question, right? How much down, and how does that look? How do those numbers play out? Do you have anything you could share with us real quick on a quick note? You know, you're looking at 3.5% down usually, or you can even do 0% down up to $1.2 million, borrow up to $1.2 million with 0% down, or 3.5% down for FHA. And of course, the old usual number, the old common number was 20% down, so you could avoid PMI, private mortgage insurance, right?
Yep. So there's a few different things to look at there. Certainly in the lower price ranges where there are typically income limits, you can have 0% down. Typically without income limits, you can do up to a $1.2 million-ish loan for 2025 with an FHA type financing, and you can do up to those same loan limits, dollar limits, with 5% down. So if you have anywhere between 3.5% to 5% down, you are absolutely in a position where you could be a homeowner.
Okay.
And
awesome.
That is without income limits. If your income falls below certain median family income limits for the county that you want to buy in,
right?
And we have actually done these. There are actually 0% down loans. So depending on the circumstances.
Okay. Wow. That's great to know. So here's our average $1 million average home sale in Los Angeles. You're going to be blown away at this, man. 13.5 million for an average in LA. How's that sound?
You're talking about luxury homes.
Luxury homes. Well, yeah. 13.5 mil is the average sale
Average.
of our luxury market in LA. So Dave, let's talk about the elements that make a home luxurious. What, in your opinion, Dave, what makes a home luxurious?
There's quite a list, but I'll tell you some of the things that come to my mind initially are exclusivity, privacy, as an example, a gated community, size, space, design,
yeah.
elevation, the materials that go into building it. Views is very important. Certainly a view would enhance the livability and the luxury aspect of a home. And then, of course, like you mentioned, certain neighborhoods. I think a lot of times, one of the most basic things we associate with a luxury home is the size. So when you see a larger home with 2-3 stories, it's got a big gated entry, et cetera, immediately you start to feel a luxury home. Now, there are condominiums in New York and Manhattan that are luxury condominiums.
Right.
And you don't get to see them from the outside. So again, there you'd have to be looking at what views do they have, the materials that go into construction, the quality of the detail of architecture. These are just some of the things that come to mind.
No, 100%. I agree, especially as you were mentioning earlier, the spacing between the house, space between your neighbors, right? That's what we want. When you get to that price point and you could afford that luxury of, hey, let's push the neighbors off the side a little bit here, right? Things like infinity pools too. That's another thing you find in a lot of these luxury homes.
Yes.
And outdoor kitchens, right? They're all to showcase the views in the backyards, which are typically beautifully landscaped and hardscaped. Not to mention things like privacy and security. You got the smart homes out there too. A lot of that, everybody wants to be secure. So they definitely want some of the best systems on their house. And the smart home technology has just really gone off the Richter. It's just so many different things that you can employ with that too now today, right? Do you have that on your house, Dave?
Yes.
So Dave, you remember back in the day that cartoon, the Jetsons?
Yes, sir.
Yeah, George Jetson and the whole family, right? Weren't they ahead of their time back then when it comes to luxury? I mean, these guys had luxury figured out back then, right? I mean,
when you think of all the things that were automated in that, they were flying around in flying saucers back then.
Yeah, even their home gym, George would be on that treadmill just flying off that thing, right? And then hopping into his little space car out in the driveway,
Was the dog's name Astro?
I think that's right, Astro, something like that. So anyways, and they had the floor to ceiling windows. Remember that? And they're rounded. That kind of do you remember that kind of a spaceship kind of thing with the windows?
With everything really being automated, that cartoon was really well ahead of its time.
And it was spacious. Had high ceilings, floor to ceiling windows, beautiful spacious home. They had the gyms in the home. Rosie the maid. Yes, they had a little robot. They had robotics back then. Remember that?
For those of our listeners who don't know who the Jetsons are, you can Google them.
Luxurious homes. I mean, they're like dream setting homes, to help see what is just luxurious through these homes and beautiful. And sometimes will just take your breath away between the views, the different angles that you're going to see, the architecture throughout the homes, and the way the doors are going to be, the doorways alone are just going to be higher. I've had people walk into some very expensive $1 million plus homes and said, listen, the doorways are too low. I'm like, what do you got? Shack in the house? What's happening here? They're looking for high doorways into each bedroom, right? So it's just a whole different type of elements that are going to be flowing through these homes, So, and it's inspiring too and breathtaking. I don't know, Dave, what's your thought?
No, I agree with everything you said. I think the word that I would use to describe that sets luxury apart that most of us look to is something extraordinary.
Something
and to just look at the word extraordinary, something beyond the ordinary.
Yes. I agree with that 100%. Even things like home gyms today, gyms in your home, It used to be, you see a Peloton bike, and maybe a Bowflex or something over there in some of these gyms. But today you are talking luxury. And you're talking like, you can have a Gold's Gym in here. And now they have elements like saunas, dry saunas. We got light therapy. We got ice plunges. Of course, the treadmills, the bikes, the weights, and whatever the case might be, the Pelotons, all positioned somewhere in a room where you're probably looking out to a beautiful view. So it's definitely gone to a new level with some of those type of items. But yeah, and then home theater, surround sounds, entertainment throughout the entire house with music, and everything's piped in, and you know, very convenient. Lots of conveniences too. You know, not, we never even talk about smart homes and the security aspects of the home. Just everything is covered. Speaking of Shaq, how about a basketball court in your house? Shaq's got one. He told me he's got one out there. Well, he didn't tell me, but I was listening to an interview. He's talking about his own basketball court, and I believe he had a bowling alley as well. What do you think, Dave?
Absolutely. Couldn't agree with you more. This is all good stuff. Something to definitely to get ideas from.
So because I work the Los Angeles and Santa Clarita markets and Southern California markets, that's why I wanted to share that with you. And then also Las Vegas. Let's look at Las Vegas. The average luxury sales price in Las Vegas is $1.58 million for the year of 2024 so far. I know we've got a couple weeks left, but yeah, that's probably what it's going to land at. $1.58 million for your average luxury sale in Las Vegas, Nevada.
Well, it certainly tells you a little bit about the affordability in one market versus the other.
Correct. And here's the crazy thing, Dave. The luxury market is leading the pack in Las Vegas with increases in sales.
Really?
37%.
Wow.
37% in Las Vegas this year in 2024.
So 37% of the sales were in the 1.5 million range. Or 1.2 to 1.5
or a million and above, getting in the luxury range, yes.
In the luxury range, right.
1.58 was the average. So there's an area up here in Summerlin called, and there's a street in an area up there right next to TPC Golf Course, right? They have 9 billionaires living there. It's called Billionaire Row, called the Enclave. And it has 9 homes on there. Let's go look at Treasure Valley, Idaho. The median luxury price there is $1.5 million in Treasure Valley, Idaho. Treasure Valley, Idaho is in Boise and all the surrounding area, probably a good 35, 40 mile surrounding area around the Boise area. 1.5 mil for your average luxury home there. How about that in Idaho? Any thoughts?
Well, here's one of the questions I have is, you know, especially when you're talking about markets that are cash markets. What are your thoughts?
I love cash markets, by the way.
That's right, cash markets. Any market you work in is a cash market. What are your thoughts on the trends you're anticipating for prices, both in the luxury but also in the non-luxury, the regular sector, as we transition now into 2025? I mean, like things that people, everyday average hardworking people are looking at going, what can we expect for where prices may go?
I feel that our $1 million market, our luxury market, is going to increase. What that number is going to be, that's a real tough one to put on that because you're talking so many custom homes, different areas. It's really hard to work with the number on that one, but I feel it's going to increase in 2025.
And do you mean an increase in the number of sales or the increase in the average price, or both?
I think both. I think both. We're going to see an increase in both of those numbers for 2025 in the luxury market. And for those that are not luxury, under $1 million and under, I think that that's going to be so indicative of what the interest rate is. Because, again, the affordability is still an issue going forward for most people, okay? So, I mean, if you happen to, you could afford these 13 and 14 and 10 and $5 million homes, interest rates aren't an issue for you because you're paying either all cash or you're paying huge down payments, right? So it becomes a real non-issue. But for prices and sales activity, it's going to be so indicative of what that mortgage rate is going to be for 2025.
I see your crystal ball behind you, so you're imbibing from the crystal ball that's behind you there.
You know, I was looking at that a little bit earlier today, Dave. Yeah, good eye. There it is. I'll bring it back into the picture here. Crystal ball, golden crystal ball.
Cash's famous crystal ball.
Let's take a look at that. Dave, actually, why don't you look at my crystal ball with me? What are you seeing for rates for 2025 at this point?
Well, that's a great question. As I might have commented before, the anticipation for rates before the election has changed somewhat to the anticipation for after. Right now, and this is something important to consider when you're thinking about your buying process, either your selling or your buying process. As we had said last time, if we see rates, most economists are expecting rates to table out around 6%. If we're lucky, we'll see them in the high 5s. But typically around the 6% mark is where they anticipate them staying for at least the next 12 to 24 months. Now, that may not be particularly good news to some, but you have to also understand the market we came from, which was in the 2s and 3s, that is an unheard of, unreal interest rate environment. And
Yeah.
as you pointed out last time, very accurately, the circumstances that caused interest rates to be that low, those are not healthy circumstances for us as a community.
Something catastrophic, right?
Catastrophic. In other words, COVID, war, a pandemic. These are not circumstances. I'm sure there's nobody out there that's saying, hey, I hope we have another pandemic so rates drop into the three, or I hope we go to war so rates drop down, whatever the different options may be. But as a result, people have to start getting used to the idea that a rate that is in the 5 or even close to 6%, maybe slightly higher than they like, but it's not bad.
Right.
And I think a lot of people are judging rates now compared to what they were, which is in the 2s and 3s.
Right.
And what people need to understand and grasp is those were unreal, once in a lifetime opportunities. And if there's anybody out there that's thinking they want to wait for rates in the 2s and 3s again, you'll probably buy in your next life.
Yeah, exactly. Or something horrible is going to happen to our country, which none of us want that to happen. So,
right. And if something like that happens, you'll be much worse off in a community sense.
Right.
And maybe the lower interest rate will be the only thing you'll have.
And that's part of another reason why I think that we'll pick up more in 2025 as well, because the rate fatigue is getting to a lot of people. I think a lot of people are starting to really accept where we're at with the rates, as you were just saying to your point, that it's time to finally just go forward. We're not going to see them drop down to 3% or below. It's time to buy the property, because as they keep waiting for rates to get better, the cost of the homes keep going up.
Well, and right? Exactly on the heels of that, look at the post effect of what happened post COVID. Inflation went to 9%. Interest rates went close to 8%.
Yeah.
So, isn't it much better to have something that may be slightly higher than that, but at least have it be stable?
Yeah.
I mean, if we could see, from a mortgage perspective, having done this for 32 years, if I could see stable mortgage interest rates in the 5.5 to 6 range permanently, I would take that any day over swings down into the 3s and then jump up to the 8s, and then swing back down to the 3s and then jump back up to the 8s. It's just not a steady, healthy environment. So my plea to all of our listeners and people that listen to you and that people that listen to us and these podcasts in general is understand that nature of interest rates in the 2s and 3s, it's gone.
It's gone. Yeah.
It was an opportunity and it's gone. And so at the same time, and where you are now, the reality is if we are in an interest rate environment in the 5.5 to 6% range, that's good. That's stable. It may be not as good as you want it, but it maybe is what you need to get used to. And now the only thing that we have to look at is where do prices go from here? But I think if we were to see interest rates stabilize, as opposed to swinging up and then correcting down, or swinging down and then correcting up,
the volatility,
stable market would have a much healthier impact on the real estate environment as a whole. Prices, inventory, everything.
Yeah. Simply said, you're saying take the volatility out of it. We don't need such drastic ups and downs in this thing, right? Driving everybody crazy. And that's true. And consumer confidence.
As you said last time, sorry, I didn't mean to interrupt you, but as you said last time, if you're waiting for those again, you're going to be waiting a very long time. I would say if you have a home that you like and the price is within reason, wrap yourself around where the interest rate market is and take the plunge.
Right, exactly, 100%. I totally agree. Get into home ownership if you're not there now. Enjoy those tax write-offs. Build equity. You're still doing all that anyways, regardless of what the rate's at
and if rates do drop in the future, guess what?
Refinance. Exactly, 100%. So Barbara Corcoran of Shark Tank and one of the top #1 producers in real estate in New York City, very famous gal. She's always tossing her opinions around and speculations. She said, I think we talked about it a couple of weeks ago, that if the rates in 2025 find a 5 in it, even a high 5, she thinks the market's going to go ballistic. Now,
from her mouth to God's ears.
What's that, Dave?
I said from her mouth to God's ears.
Exactly. But I could agree. I don't know how ballistic it will go, but I think it's going to get pretty darn busy. We get into a 5.95, a 5.75. I mean, obviously, the lower we get, the more busy we're going to get. But also, the inventory has been picking up across the country too, and that's a good thing.
Yes.
Because every time someone puts a house on the market, that brings another buyer into the market typically as well, right? But it also brings more inventory and more options for other buyers to have something to look at, that they can find something that they like. So you just got to. Go ahead.
Go ahead. No, you go ahead.
You just got to watch that inventory to demand levels, right? Inventory starts getting too high, demand starts dropping down a bit because rates have gone up or whatever the case might be, or consumer confidence has been shot down for whatever reason, right? Then we start to have price reductions. Then we start getting to that again. But inventory could rise, right? At a steady pace, and as long as demand keeps there with it. So it's going to be a fine balance for our Fed chairman to keep that moving at a good, consistent pace. Right?
And on the heels of what you just said, I think if people can wrap themselves around a 5.99% interest rate,
yeah,
that combined with the improved inventory that you're talking about, I'm hopeful that 2025 will be a considerably stronger year for the real estate market than 2024.
I really feel good about it, and for a multitude of reasons. But number one, most importantly, is consumer confidence has shot up. I mean, you've seen the stock market rallying up, Bitcoin rallying up like crazy, real estate picking up a bit too. Just everything seems to be better in a lot of ways, except for the drones flying all around the country. We don't know what the hell's going on with that, but
drones flying all
yeah,
over.
yeah. What did I hear yesterday? Bus-sized drones flying everywhere, or car-sized,
Bus-sized drones?
Yeah.
Well, let's hope one of those doesn't crash.
New Jersey seems to be getting hit the hardest with the drones right now, but they're listing videos. That's right. There are new homes coming on the market. Maybe that's what's going on with this whole drone situation. And apparently New Jersey, they got a lot more homes coming on the market over there.
To your point of inventory, supply and demand is everything in this country, in any market. And ideally, you want to have a healthy balance between supply and demand. And as we've said before, COVID completely skewed that balance where the inventory just dropped off the face of the planet. And what did that end up doing? Prices shot up.
Yep.
What happened during COVID is an extreme example of, while it may have been beneficial for interest rates, an extreme example of what you don't want to happen. Inventory and supply and demand to be so far out of whack that prices go through the roof.
Correct. You're 100% spot on.
And you don't really want the opposite either, where there's no demand and such a huge amount of supply. Then you've got another situation where you're looking at a situation where there's people don't have money to spend. That could be considered a recession. Right. So ideally, you want to have to try to find that balance. We as an economy have to find that balance between supply and demand. And I really believe that with inflation having come down, and as you said, real estate inventory improving, I really think we're moving in the right direction of getting closer to that balance between supply and demand in the real estate market. And I think we're going to see more of that in 2025 than we did in 2024.
Agreed, Dave. Agreed. Spot on with you on that, man. Listen, some of the metro areas, the speculation for a lot of sales activity. You've got some spots in Colorado Springs. They're calling for a 27% increase in sales. In
Number of sales.
Number of sales, yeah.
No increase in number of sales.
We're just talking sales.
Wow, that's significant.
And Miami and Virginia Beach and Richmond, Virginia, we're talking again collectively somewhere around 21 to 24% increase in sales in those markets as well. Those are some of the top markets they're talking about for.
So for every 4 homes that sold in 2024, 5 will sell in 2025.
Correct.
Yeah. Wow. That's a healthy increase.
How that all plays out, 11.6% of homes in California boast a price of $5 million or over. 11.6% of homes are $5 million or over in California. How about that?
Well, the good news for the rest of us means that 89% of the homes are under $5 million, which helps those of us who aren't in that luxury market. But that's excellent.
Right?
That's good statistic to know. Yeah.
Yeah. Dave, are you familiar with what's going on with this generational wealth transfer of wealth that's going on right now? And they're speculating for the next 10 years or so, 10 plus years of this transfer of wealth, one of the largest in history that we're going to have. You have any knowledge on that?
I've heard a little bit about it, not as much as I should, but maybe it's something we need to read up a little bit more about and share about more on our next podcast. But I will say this, when this country was born to date, there have been the opportunities for families to build wealth. Right. And because at a certain point people pass on, as an example, just 2 days ago, yesterday I was reading now the Walton family, the 3 children that are the heirs of Walmart, Sam Walton.
Right. Yeah.
They are collectively the richest family in the world, at least in the United States, and maybe the world. All of that wealth combined between the 3 children and their heirs is about $432 billion, literally approaching a $500 billion. But this is an example of the kind of generational wealth that we're talking about.
Yeah. Well, they're talking about 31 trillion will be transferred by about 1.2 million people over the next 10 years, they're calling
Yeah.
for. And most of the wealth will be going to the older millennials and Gen Xers.
Well, now you know where 432 billion of that 13 point something trillion is coming from.
So yeah, another interesting thing too is I have a friend of mine that's in the not commercial, but he's selling businesses, right? Mergers and acquisitions, and he's talking about following with suit with this transfer of wealth to the millennials, to the older millennials and the Gen Xers, is that the mom and pops businesses, especially that are phasing out, they're getting to that age where, like as you were saying with the home, same thing, that it's time to kind of step out of that business and either sell it or give it to the kids or have the kids take over that business. Well, here's what's happening. Overwhelmingly, the kids don't want the business. They don't want to take over the family
They
business.
want the money, but not to take over the business.
Well, yeah, I mean, always, right? But that's probably not going to happen because mom and dad, that's their nest egg. That's their retirement. They got some money there. So I think you're going to see a lot of businesses being sold with seller finance, right? You're going to see people, come on in. We're going to show you the business. We'll finance this thing for you for 3 to 5
because
10
the
years,
businesses have equity in them.
A lot of equity in them. Yeah, there's a lot of businesses with equity, but this transfer of wealth, again, not going to the kids so much just because the kids are electing not to take it. I don't know if they've got their mind set on something else. They don't want to do what the parents did, So I know my son doesn't want to do what I'm doing. He watches me and goes, forget it.
Well, speaking of businesses and wealth, this is a whole nother subject and likely for another podcast. And maybe we could have our listeners here reach out and tell us what their interest is in hearing about this.
Sure.
Because it reaches into everything. It reaches into your end of what we do. It reaches into my end of what we do. Some of the odd 7 or 8 or 9 highest valued market cap companies on the stock market are all collectively north of $1 trillion in market cap. And it has to do with 2 very specific letters of the alphabet. And it has made its way into all of our lives. And that's AI. Automated intelligence, artificial intelligence, and how that artificial intelligence plays its way into the real estate sector of what we do, plays its way into the mortgage sector of what we do, and so many other things. That may be something we could talk about in the future because there's several of these companies, everywhere from Google, Apple, Microsoft, Meta, Amazon, Tesla, Nvidia, and most recently on Friday, a company that's called Broadcom. This is a little out of whack, and just as a statistical fact, their stock went up 24% on Friday. 24% on Friday. They went from being a below $1 trillion valuation.
Did my good friend Mr. Dave Sousa have some money invested in that?
Well, I think any one of us who have invested in the markets have invested in AI, and I will tell you that from a broader perspective, AI is, and I personally believe it's just getting started. When you look at how it plays its way into, one of the interesting things that I think our listeners might want to get feedback on is how is AI making its way into your side of the table, the real estate sector? How is AI making its way into my side of the table, the mortgage, the financing, the index? It seems to be making its way into just about everything we do.
Let me ask a question, Dave.
For thought, like we're talking on the subject of wealth.
There's a lot of industries that are concerned about AI taking over their jobs, which there's going to be a fair amount of those jobs, if not a lot of them, that will be taken over by AI and robotics, right? I don't know how you feel about that in the lending world, right? But I'll tell you, in the real estate world, there's been a lot of chatter about that too, just taking over realtors. The overall consensus coming back from a lot of people being polled on that was, no, that's not going to be the case. A realtor there's so much diversity in what they do for every transaction that's closed. It just would be impossible.
Well, and I'll share this with you.
That big.
There is a human emotional relationship aspect that one develops with a realtor. I mean, if you're going to have a robot for a realtor, you might as well have a robot for a wife or husband. And my point in that is that spousal relationships, friends relationships that we have, yes, even if it's built on a business basis where you're providing a service, there is an emotional component to buying a home that you share with a realtor that is completely removed and void in an AI market.
Right. Yeah. And there are so many questions to ask a seller or a buyer, around finances even. And I'm sure you've experienced this too, that people are very guarded when they talk about their finances,
Right.
and we need to have a conversation about that and kind of get down to brass tacks on this. Like, let's talk about where you're at so we can help you get to where you want to go. But we can't do that unless we ask a lot of questions. And I'm sorry, some of them might press you a little bit. Or you're going to have to open up a little bit. And there's people that are guarded with that. So sometimes we've got to be able to decipher through what's real, what's not, what's true, what's not, right, to be able to help people in the best capacity that we can.
To your point, I would even admit this, even in a contrast of my relationship with clients versus yours. The lending side of it, while we build relationships with our clients and we do things a certain way, it's largely objective numbers. Debt ratios, credit scores.
Right.
Relationship a realtor has with the client and the two of them have with finding a home,
right,
that is very largely subjective.
Yeah.
It's not just black and white. It's a subjective relationship.
Right.
And trying to take something that is a subjective relationship and replace that with robotics or artificial intelligence, it almost defies gravity. That's my 2 cents.
Yeah, you're right, because there's such an emotional element involved in
Absolutely.
Helping people make decisions one way or the other. And we could even be looking at a house, and we start looking at houses out there. And I'm like, listen, I know you like this house. I see both you, the husband and the wife, they're all getting excited. This is it, checking all the boxes. Wait a minute. Let's talk about in this particular area, you've got a very high fire insurance, right? You've got a Melrose tax on this house. You have a very expensive HOA here. So collectively, between these three elements, this really prices you out, and then stack it onto what you're paying with your interest rate. And we've had those discussions already about affordability. You start to find that you've got to find homes. Maybe you got to really look at homes that you fall in love with that don't have a high HOA and the Melrose tax. Maybe the fire insurance might be a little bit on the lower end of things,
Realize this. You and a couple are standing in a room with a house, and they're trying to decide if this is or isn't the right house for them.
Right.
There is a human component of you reading them as people, their body language, their eyes, the way they look at each other.
Correct.
To be able to help them figure out if this is or isn't the home for them.
That's right.
That a robot will never do.
Right.
That an artificial intelligence will never do. And
right.
Look at the definition of the word artificial intelligence. What's the first word in that state? Artificial.
Yeah. It's funny. They followed up with intelligence, though.
It's artificial.
Yeah.
And that implies it is not human. And I go back to that example. You and a couple or family that's going to be buying a home, and this may be the home where they're going to raise their children. Component to you standing in that room, reading their body language, reading their emotion, reading their likes and dislikes, their fears and their excitement, that an artificial intelligence machine is never going to be.
Right. One thing
anyway, I guess I've said enough.
One thing I've done with some buyers, I've been in backyards, looking at houses, and I can see the excitement. This is it. They want to make an offer. And I'll even look my head over the fence to the neighbors and see what do the neighbors have going on all surrounding areas. I said, and I'll tell people, listen, I know you really love this house. It checks a lot of boxes, but do yourself a favor. Take a look at the neighborhood. Take a look at the people that you'll be living and cohabitating right next to. Sometimes it seems like 5 feet away, like you can reach out and touch your neighbor, right? But, hopefully we find them homes that have a little bit more space between the houses, which is always very desirable. We're always looking for that. But that's also going to cost more, too. The further you get away from the neighbor, the more it's going to cost you. So there's an element there, too, that you've got to buyer's excited. They're, everything's checking boxes, but you've got to say, wait a minute, slow down. Let's think about this. Let's take a look at that. Because we want it to be the right house for you. We want you to get in there, close this thing up, and live in it and be happy. And then when the equity builds, time goes on, call me up because we got you into a home that you really liked. And somebody was honest with you and pointed a few things out to you that maybe you did not see, which happens all the time.
Absolutely.
That's why you want to bring in somebody that's done this a lot. Sound good?
Absolutely understood. Couldn't agree with you more.
Okay, fantastic. Great. One quick thing I did forget to talk about was I saw that refis were up 27% and that applications for home purchases as of late declined 4% month over month, but are still up 4% higher year over year. Does that sound right, Dave?
It does. And I'll tell you why that sounds right. The mortgage industry, the real estate industry as a whole is better than what it was this time last year because we've moved in the right direction, right? Rates are better. There's more inventory, et cetera.
Right.
The reason why there may be somewhat of a drop from last month to this month in the shorter term would be more indicative of what rates have done since the election.
Right. Yep. Well, plus the consumer confidence is shooting up because the election's over. Not getting political, but whatever way you are, right, left, whatever it is, the decision has been made. Now you know, right? That volatility has been taken out of that part of the equation. Now people know they're either confident going forward, or maybe they're not confident, so now they can make a decision. But
Well,
I've
the
seen
decision's
consumer
being
confidence
made, and
really
now
shoot up.
people have to process how they feel it will affect.
Right. Exactly. So. And everybody out there, remember, any questions about real estate, about lending, about anything at all with your home. Hey, we even could tell you about packing, trucks, moving, how to get your utilities handled one way or the other, on, off, whatever it's going to be, and all the other little intricate details that are going to go into making that move, because there is a lot. There's a lot, and I'll help you prepare for that as well. We'll go through a checklist of things that you should get yourself ready for, and also be mentally prepared for, especially if you're moving a family or a business and all those type of things. How is that going to play out? How's it going to look? And I'm not only going to advocate for you, but I'm also going to help coordinate that with you as well. So you're going to have a partner involved all the way from getting the house on the market, getting it sold, and then getting the move, handing you a check, giving you the keys to the new house perhaps, or your old keys to the new owners of that house. Anyways, any question, anytime. And then again, when it comes to mortgages, interest rates, stock market, whatever you want to talk about with Dave, you got his number too. Give us a call anytime. And I just want to wish everybody a happy holidays and thank you for tuning in.
Yes, very happy holidays. Thank you for tuning in. And please don't hesitate to reach out to Cash with feedback either on this podcast or questions or concerns you may have, which we could discuss on the air.
Perfect. Dave, thank you, my friend. Have a great rest of the day.
Thank you, brother. Good rest of the weekend.
All right.